get this scalp, but it's only $5, which isn't great. So. All right, so we just got a scalp of 5. And then we got stopped out on the runner, which is fine. So we made like $4 or $5. What lines do I have besides EMA? Nothing. This is the EMA right here, these 3. It's just 3 different ranges of the EMA. So it's like a 50, 14, and an 8. You can see right here, 15. And this is just to indicate the trend direction, like definitely. If these 3 stack up in a certain way, you know you're in a specific trend. So purple, blue, yellow would indicate an uptrend, and a lot of times this can continue on for a lot longer. The market's kind of like, woo. But right now the yellow, the opposite, means we're in a downtrend. So I have stock RSI, and I had to download this specially, so you might not even see it in the Ninja Trader thing. So I'll send you the one I downloaded. So this is a Stochastics RSI modification right here.
You suck.
And what you're going to see is kind of a line here at the 80 mark and a line here down at the 20 mark. And then these 2 lines running right here. One's the Stochastics, one's the RSI. And yeah, basically when they cross low, you want to buy. They cross high, usually like right here, it means you want to sell. And 9 times out of 10, it's well, so. But it also depends on a couple things. You have to be in 2,000 tick. I noticed if you go into like lower tick rates, it's not as accurate. So for some reason in the 2,000 range, it's pretty damn accurate. So I would not trade in this right now because it's kind of choppy. It's like doing all kinds of crazy stuff. Usually you want nice, like smooth, smooth ups and downs, peaks and valleys. This is kind of ugly. I mean, I guess there's another cross right here down technically, so you probably could take this. And I'm just gonna do it because I'm trading the $5 ones. So why the hell not? Hey, look, we got a scalp. So then I'd move my stop up past the point where I bought right here. I'd move it up. And it got hit again. But we did make a scalp. So if I was trading the larger contracts, I would have made, that would have been $50 right there. In this case, it was $5 and then whatever extra my runner had. So I'm trying to basically get this back up to $500 so I can start trading the bigger $50 contracts again, which I was hoping to do this morning. God damn it. So moving my runner up there I might have moved it up too aggressively because looks like it's continuing in a downtrend. So sometimes you'll get these springbacks where it'll hit your stop out and then, you're out of the trade, unfortunately, and then it continues to go back down. So I don't know. You just got to kind of go by feel there. I could technically hop back into this because we're in a downtrend. The chances of this continuing lower are high, or it could reverse right here. It's kind of in a weird state where it's kind of hard to tell what's going on. So I'm just gonna sit out until I see a little bit more definite signal of what's going on. And yeah, you could sit here for like a good 10 minutes and not do anything. So you just kind of patience is key. See, if I had sold right there, I would have been stopped out. But often what happens is you'll get an attempt to go high, It'll go back down. It'll get a second lower attempt to go high, and then it'll continue on a bigger downtrend. It's called a two-legged pullback. What terms do you want to? Oh, okay. Well, we're not doing puts and calls in this. That's stock related. That's related to options trading. This is futures, so it's a little. It's like you look at this and think it's stocks, and it kind of is, but it's not at the same time. So when we're buying market, that's a bullish signal. That's when we see a bull signal, like when we're. Yeah. Okay. So when we want to buy market. So buying would be you want to buy when it's low and sell when it's high. So buying is green. You know, when it's going up, that's when you'd want to buy because you're buying. Let's say you buy right here. You know, and the price goes up. Boop, 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 boop. So you bought in low, and then you would sell it someplace up here. Sell market is the opposite. You're selling expecting it to go down, so that's bearish. So you always sell when you're in a downtrend like this. Sell. Going lower, we're going to go down. So you want to sell because what that means is you're borrowing the stock or in this case the future contract from your broker. And then you're buying it back at a lower price, if that makes sense. It's kind of hard to explain, but you're making a profit off of it going down, being bearish. These don't matter. You don't need those. The only thing you need is buy market and sell market. Bid and ask are kind of, what people are trying to get, but it's not what the market's at right now. So you don't really ever want to use those unless maybe sometimes you might get a bargain deal, but I've never used them. So I always do market orders, and that means the rate that this is currently trading at. This rate right here, this 4175. A bid would be, let's say, you're trying to get it for a lower price or something. So there's no guarantee that you're going to get that order filled. So just always use buy and sell market. And I think I've showed you this before. This will clicking buy market or sell market will instantly get you in wherever this is at, but you can set, by right clicking, you can set like a sell limit, which is what I tried to do. And so that means if this comes up and touches that, immediately it's like pushing this button. It's a sell order. And that would mean, okay, boom, 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 this is extended as far as I think it's going to go. Now I think it's going to drop. So it comes up, touches that, and then it starts to drop. You make money, and vice versa. So right now, I've set this up manually. This is my scalp plus runner. And you have to have two contracts for this, obviously. One's your initial scalp that gets, bought out right away. And then the runner is the one it's the contract that's like way down here. So or way up here, you're expecting it to either go a lot higher or a lot lower. It's kind of like your free money that you've already got your scalp, and now you're trying to just see how long it goes. So you always have to trade two contracts with that, which means if you're wrong, that's double the loss. So you have to keep that in mind too. It's not, but it's double the profits too. So this market is kind of weird this morning. I wouldn't really buy into any of this right now because it's not super clear about what it wants to do. it's trading like right in the middle of the three EMAs. It's about to get it's like it could go back up, and then this would be in an uptrend now. So it's if it's below this purple line, that's a good signal that that's going downwards. When it starts to get into this middle range of these three lines, it's kind of in a weird state. If it goes above this, it starts going back up, then we're now back into an uptrend, and we'd want to buy more than we sell. So try to explain that concept a little bit more. If this is if we're in a downtrend, everything's going down, you could do buy orders, but chances are that if you're in a downtrend, what's going to happen? It's going to continue to go down, at least for a while. So it's better to kind of trade with the market and do more shorting or selling in this case, where you're buying at the higher rate and expecting it to go down, where you make money because you're borrowing the stocks. So yeah, usually you want to trade with your three EMA indicators in the direction that this is going. And I'm not entering any trades right now, as you can see, because just still no clear signals. But check this out, for example, okay? There was this cross down right here. And what happened right after this cross down? Look at that. Huge drop. So if you would press sell market right here, right when you saw that, boom. That would have been like 1, 2, 3, 4, 5, 6, 7, 8. See, each one of these boxes is a tick, or not a tick, is a 50-point scalp. It's 1 point. So that'd have been like how many hundreds of dollars right here if you had gotten in at the top of this indicator. And it really is that simple. You just wait for the indicator, and buy or sell based on what it's saying. And in this case, this said we were in an uptrend. So sometimes I kind of disregard the EMAs because it's just an extra safety net. But a lot of times I'll sell into these down crosses if they're really strong like this one, because I know it's so overextended in this direction that there's a huge chance that it's going to correct itself a little bit. It's going to once you see so many greens in a row like this, you kind of get the sixth sense, obviously, that it can't go up forever, right? It's got to come back down at least some point and kind of start to regulate. So yeah, if I'd have saw this cross down and seen this huge extension up, I would have for sure sold right here and gotten short, and that would have been a big old shit ton of money. Same right here, look at that big old extension. Cross down's not as like apparent as this one, but it's still there. There was a little bit of choppiness right here, and I guess technically the cross down for this huge drop was right here. So you could have bought in right here and been screwed a little bit. So that's why I say don't go into these choppy ones, because it's kind of like bloop, and then it shot up right here. Look at it. There was no indication really that it would have done that. So that's the risk of this indicator, where it's like most of the time it's right, but every now and then you get these weird zones where it's kind of like gets into sketchy territory. And I would have said, like, even if I had opened my stop way up, it would have still gotten me stopped out. But here's another one that was right. Look, check this out. Cross down, boom, 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 drop down. So you would have made, that's 50, 100. You don't even have to go far. That's the beauty. Oh, look at this huge cross down right now. I'm missing because I'm talking. I might have gotten this into this a little bit late. I'm going to raise my stop up because I feel like this is probably going to continue down. And then let's get into this. Let's see what's going on. So my stop's up here now, and the reason I did that is because I want wiggle room. Even if this goes back up, I know that it'll probably come back down. So it's continuing to go down, and I hit my target. And then this is my one scalp contract that I tell you about where it's way down here, just expecting this to go lower. So right now it's going back up. It's probably going to stop me out, but you know, because I'm trading these small contracts, that was only $6, $7, $8. But if that was a big contract, dude, you just made yourself $50, $60 like that, like so easily. And look, this is what I'm saying about my stop being too aggressive, because it did continue lower and I could have gone farther down. That's okay. You know, it's okay to play it safe, especially when you're trading in big numbers, dude. It's like, so what if you're playing it safe, man? $50 that easily. It's like in a couple seconds, you know. But you saw that. You saw how quickly that. I mean, if I'd been watching this more, it would have been pretty obvious that I was getting into this cross down. But I was able to get into that cross down just like that, get that scalp, and then quickly get out and make that bread. So now it's adjusting, you know, it's going back up. Sometimes I'll get into little trades like these where it's like, I know this is an adjustment fade. Yeah, smooth crosses. Yeah, they equal exactly, dude. I'll try to show you an example of averaging down. So sometimes you might get into a trade too early, and then you can, let's say it starts to go back up or something. If I'm selling, I want it to go down, right? It starts to go back up. Well, I can sell more contracts like up here, and then now my rate of needing it to move is lower because I'm using this going against me to my advantage because I'm selling along the way, and I'm moving my line up essentially.
Cool.
Little trick. Now I wouldn't necessarily do that with like the $50 contracts because, you know, that's hundreds of dollars you're playing with. It's fine to do it with these $5 ones. So just like that, you've seen I've had like 3, you know, successful trades already. If it wasn't for that one fuck up this morning, I would have been in the green right now, big time. I'm really pissed about that. Not your fault. That was my fault. I wasn't paying attention. Nah, dude. I set a limit. I set a buy instead of a sell. That's all that happened. Misclick. So yeah, this is correcting, you know, it's doing its thing. We're obviously in a downtrend, and this can continue on for the rest of the day, or it could change up at some point. So it's kind of like, who knows? This is a two-legged pullback right here. You can see that pattern. Yeah, I mean, that's more swing day trading or intraday trading, and you can hold. I mean, yeah, exactly. See, it could reverse on you. What if it reversed on you, and then you're just like stuck in this horrible trade, and you've lost all your money? But yeah, if you're like, oh, we're in this huge downtrend, I'm gonna sit on this for a while and see how long, you know, this goes. You can do that. There's no law against it. That's when you become a swing trader. Well, swing traders technically means overnight trading, which you cannot do on these futures markets unless you have a certain amount of money. I want to say a certain amount of margin, because of the, they increase the risk of huge losses and margin calls. Margin calls is when your broker comes after you and says you need money, you need to pay them money. But yeah, I mean, there's no law against sitting on a trade for like an hour or two and seeing just what it does instead of getting a quick scalp. I mean, that's the difference between making thousands and making like a quick $50. Like you could come up pretty good. But you have to close out everything over before the market closes, and then lose. Yeah, the whole thing is insane. I know, dude. It's like it shouldn't be this easy to just make money. And at the same time, it's like, why is this so unknown? And what it feels like a dirty black market or something, dude. It's like, who came up with this? Who came up with these terms? Who came up with these ideas? Like futures, you're trading, on the future. Like you're trading against a price the stock could be. Dude, I don't get it. Don't really need to get it. Just need to learn how to play it and use it to your advantage. Like everyone is doing this. I don't think everyone's doing this, man. I think very few people know about this. Very few in a sense of like, yeah, there's probably, hundreds of thousands of people trading this, but in the grand scheme of things, it's not very many people. More people are doing stocks. All the other traders, I mean. Yeah, that's a good question. I think like if you're in trading enough, to be looking at these charts and doing this, you're probably going to know what else is out there. And maybe it's just a matter of like not testing the waters of other things. Yeah, I'll send it to you. It's like a file that you have to import into NinjaTrader. It's actually really easy to do. You go like up here to tools. Let's see, where is it? Tools, import, NinjaTrader script add-on, and it's just like a zip file. Oh, I don't know who the fuck Michael Chin is, but alright, good for him. So yeah, this isn't like a sideways kind of trading zone, where it's like we're not making any kind of huge movements. It's really choppy right now. It's like up and then back down to the same point, up, back down to the same point. We're trading sideways, and this is kind of generally what you'd want to avoid because, yeah, you can't get a good read on what the fuck is going on, so you could easily lose money if you're trading in a super choppy region. See, look at that. Technically, like look at it this way. I know these bars are kind of hard to read, but this went up and then it went right back down to the same exact price it started at, basically. So there was no movement if you're looking at that. I mean, it did technically come up to here. But remember, these wicks are where the price got to and then decided to go back up in that bar. So, and that is one thing you want to learn about looking at these candles. I don't use too much. It's called price action trading, and technically what we're doing is partially price action trading, but more of it is reading candlestick patterns and like looking at these bars and being like, oh, what's obviously a bullish bar right here when this wick is so long. The price tried to drop down this low, but it couldn't do it. Boom, and went back up. So there's all kinds of ways to read these bars. And dude, I've seen people with charts you wouldn't believe, dude. It's like on YouTube, if you go on there, you'll see like 700 lines, and it's basically like astrology for fucking traders, where it's like, I don't even know what I'm looking at anymore on your screen, dude. There's just so many lines everywhere that, like, how do you even know what you're doing? I mean, if it works for them, it works for them, though. I just feel like the simpler the better. It goes up, goes down. Goes sideways, don't do it. You know? And then the magical Stochastics RSI that somehow works like 90% of the time. Like technically we're in a cross up right now, but it's, you know, I would like to see a lower dip here because it's kind of in the sideways region. But even though it's in that sideways region, you can still see the cross up as turning into this uptrend. So that's still, you know, if you had hopped into this, that's still like a good $100 right here that you could have made from that little bit of movement. When you're trading these little bitch $5 ones like I am, it's not really worth it for these smaller movements. But I mean, you could always increase your order count, I guess, and then it kind of becomes that way. I'm not getting into this right now because we're still in a downtrend technically, and it's extended up a good amount. I mean, it could go higher. Like our last high was right here. So, but you could see these lower highs, right? That's how you know, like, okay, I got here this time, but chances of it getting that high again are a little not that great because look at all these times that it's just continuously gone lower. Hence a downtrend. It's not rocket science. So, using the logic of that though, and kind of following this, you could say, well, as it starts to get closer to this last high point, we should probably start to sell right there because it's probably not going to hit that, and even if it does, it won't go past it. It'll stop right here, and then go back down. Now, if it does break out, and it does go beyond this previous high right here, then that starts to be, maybe we're going into an uptrend now. So you don't always have to rely on the Stochastics RSI. Sometimes you can just rely on good old-fashioned logic and reading the chart, you know? All right, this is a bear bar. Oh, now it's turned into a doji. A doji bar is one like this, where it's like right in the middle, and it gives you no indication whatsoever if it's going to go up or down. So you never want to take a trade on a doji bar technically, because sitting right in the middle there, it ain't a good indicator of anything. So yeah, we're still in that kind of uptrend off this cross low here. And if I wanted to, I could set a sell limit right here and say, well, if it comes up and taps that, I'm going to get into that trade. That way you're insured of getting in at the high. The higher you get in on a sell order, the better, because the less you have to move downwards to make your money back. So let's just do this. I'm going to hop in right here, and I probably shouldn't because the chances are it could go higher, but it's $5, so who gives a shit? So I got into this pretty high up. I got into it like right here. And so all it needs to do is drop down like right here for me to make my money back. So I'm taking a risky trade. I'm taking one off the plan. And
Do you want to do their hair or no?
no, just have them comb it over. You're fine. You're good. All right, so I just reached my high, which is not good. But this is a good opportunity to show you averaging down, where I could sell more contracts right now. Now I'm in this for 2 more contracts, so I have 4 open. Now, if this reverses into an uptrend, I'm screwed, but you're going to see a little riskiness here. So we just hit, and you can do all these fancy lines here. You can do, all right, I have some hotkeys for this. Type 1, is that my, no, Alt 2. Alright, now I got a line here. So now you can see it came up and hit that same high right here, and now it's starting to kind of go back down. So that would be considered a resistance point. Support would be like down here. Resistance is up there. It's resisting going any higher than this point right here. So, yep, you know, it's like I said, it hit that point, and this obviously isn't always the case, but we used a little bit of logic there to deduce that it would try to get, it would get to that same point and then drop back down. Now, if it continues going up, then we could be breaking out of this downtrend. And I might have just lost money. So, let's see what happens here.
How's your live stream going?
It's going to see.
Let's put on some dank music.
Nah, I'm talking to Rob. I'm setting my stop just above this last high.
Hey, Dad.
If it breaks out of that, then I'm just gonna let this close.
He fixes it.
Yeah.
Dad, do you know what his
Moving.
hair looked like? There were like 4 spikes up with like 4 hairs. Dad,
There you go, bro. Now you're looking slick.
they looked like
Can you
this.
relax, Cooper?
What?
I was talking to Coop.
You're making fun of me. Ow.
There you go,
It
bro.
was funny. You had like these things on your hair. It's not like I'm a monster. Yeah, well, it was funny.
Here. Put on your socks. Should be right there.
Let's see how much we're in the hole. Oh, lovely. Because I've upped my order amount to 4, you can see that's quite a bit more. Yeah, this is kind of teetering on the edge right here. I do think that it will drop back down. We're getting to the point where it's getting into an overbought point. You know, it could continue right here and then probably drop. So I'm not too worried about this yet. And this is an example of sitting, you know, you can sit in these trades for a little while and kind of wait for it. Get yourself some more coffee, stress it a little bit. Now, obviously if I was trading $50 contracts, I would never have taken that trade right there. I would have waited for the cross down. But
What do you have for lunch? Dad's live stream.
you know, I don't know. It's a good question. There's some calculation going on behind the scenes to determine what these lines are, and I'm not exactly sure what they are. But I would like to learn more about it. You can look up stochastics RSI and it'll tell you. All right, here we go. Looks like we could be headed downwards, like I said.
He's not streaming on YouTube.
You hit that resistance point, and everyone was like, nah, fam, that's too rich for my blood. We're dropping this back down. So this line right here, I don't know if you figured this out yet. This is the point where your average of your contracts is. So when you get to this line, you basically, that's your break even. It hits 0. And once you pass this line, that's when you start making money. See? Boom, I'm in the money. I can move this up a little because we're so far, because I have so many contracts going. It's a little past 1 tick. Technically, I can move this like right here. Target filled. I made my money, and I'm in a runner. And this is strongly going down. Yeah, as soon as I filled my target, now to make sure I can, so this is my new, this is where this final contract is right here. So moving the stop down is guaranteeing me a profit. If this comes up, starts to come back up, it goes past this line right here, I would lose money. So moving my stop right here will ensure that if this price comes back up, I still have a profit because it's past this point of where I sold.
Bye.
Bye, baby. Alright, I love it. So,
Cat mask again.
I'm being pretty aggressive with this stop right now, which maybe I shouldn't be, but I kind of want to buy back in because I'm actually before this cross down, which means it's going to go even lower. Look at that. Huge gains, dude. I told you. So I keep moving my stop down because if this starts to reverse, I want to lock in these profits, right? I want to sell out before it starts to go all the way back up and lose that 4-point gain. So that would be 50 times 4. You know, if I was trading the bigger contracts right now, dude, I would have just made, and then bam, my stop. So down to only $32 lost now. So I'm back up to $500. Actually, 50 more cents so I can get into the $50 contracts and do the same thing in there. There's no difference. It's the exact same shit. So how many successful trades have I had this morning already? I had one bad one because I fucked up, but the rest have been successful. So technically the cross down just happened. So what's probably going to happen here is this is trying to pull back up a little bit. So technically the cross just happened. So this is when you would say, oh, I'm entering this trade. I got into it early because I just kind of guessed. But technically you could get in right now. We'll do 2 contracts. And this might bounce back up a little bit. Well, no, I just got in on another one. Okay, move my stop up to where I got in. Now this, because this is so close to my stop, I didn't make a profit on that second contract. But now I'm up 504. So I could switch over to the big boy contracts now, which you want to start sweating. You got one chance here. When you're this close to the $500 limit, you got one chance to do this right. So look, big boy contracts. Cross down, downtrend. That'd have been 1, 2, 3, 4, 5. 5 times 50. And it's still going. I'm tempted to buy a contract right here, but it's risky. Actually, this is a 2-legged pullback. Down, up, down. It's gonna go back up, and then it's gonna drop. I'm gonna hop in a contract. Fuck it. 35. Come on. Boom, just got a $50 scalp. So I'm up to $554, $22 profit for the day because I had that huge loss at the beginning of $75. But that, my friend, is how easy it is. I'm gonna get hit hard by fees though. That's kind of why I want to see a little bit more profit. So I'll probably do, I gotta get to work. No, it's almost 8. Yeah, usually what I do is I start getting into work at 8. God damn dogs. Yeah, no worries, dude. We'll talk through more of these going forward and you'll just kind of learn it, I'm sure. Peace out.
Hey, beautiful. Good morning. I'm so happy to see you. You want to talk to Dada?